Hey everyone, this is Kevin with TopRealEstateAdvice.com bringing you a market update and market outlook for 2019. This Realtor.com article says that 2019's housing market is likely to be stronger than they originally thought, and here's why. Despite a real estate slowdown gripping the nation, this year's housing market is expected to be busier than Realtor.com economists originally predicted late last year. That means more home sales and higher prices are on the way. The anticipated uptick activity is due to lower mortgage rates, which make homes more affordable for buyers. The economic team expected rates to climb to 5.5% in 2019, but instead they've hovered around 4%. They were 4.17% on 30-year fixed-rate mortgages as of April 18th, according to Freddie Mac data. Economists say rates are now likely to rise a little to 4.5%, still well below what buyers were dreading. However, it'll be nothing like the feeding frenzy of recent years. It's still going to be a lukewarm year for the housing market, says Chief Economist Danielle Hale of Realtor.com. We're going to see higher prices and slightly higher home sales than we expected, but home sales are still going to decline slightly as a result of the housing slowdown. There's a gap between what sellers are looking for and buyers are hoping to pay. While a single percentage point difference may not seem that significant, it can add up to more than $100 to the monthly loan payment on a median-priced home of $300,000. This assumes the buyer puts down 20%. That can translate into tens of thousands of dollars over the life of a 30-year loan. The downside for buyers and the upside for sellers is that prices are expected to rise more than Hale's team originally forecast, going up 2.9% in 2019 instead of 2.2%. That's because the swelling ranks of buyers motivated by those lower mortgage rates will increase demand and therefore prices.
So there have been a couple of surprising developments early in 2019. One is that the Federal Reserve has been a little bit more committed to being patient at raising interest rates and tightening monetary policy. What that means for housing is that we can expect mortgage rates to be a little bit lower than we had originally predicted back in November. There is a possibility that the Fed will increase rates later in the year, so we do still expect some upward movement in mortgage rates, but definitely not like we expected in November. There are two political dynamics that we're watching. One is Brexit. The British people voted to leave the EU. They're still working out the framework for how that's going to exactly work. If they try to leave with a bad deal, we could see slower economic growth for both Britain, the EU, and that would translate into a small hit to the US economy as well. That could mean slower home sales in 2019 if there were to be a bad deal. If they negotiate a good deal where the trade relationships remain roughly similar to where they are right now, there's still a lot of open trade between Britain and the EU, then we won't see a huge effect. Another is the trade situation with China. So there have been a lot of tariffs threatened back and forth. Will this escalate to a full-out trade war? Recently, there's been some signs that President Trump is not looking for that kind of an outcome. He's been willing to delay the deadline for a trade deal with China. So he's very aware of the fact that tariffs protect domestic industry, but they do make things more expensive for consumers. Everything from washers and dryers to the price of homes. So that could lead to fewer home sales in the event of a bad trade deal or a trade war with China. But it does look a little bit less likely to happen. But it's something that we're watching for 2019 as well.
Meanwhile, Realtor.com's economists predict the number of home sales will almost hold steady, dipping just 0.3%. They originally believed the number of sales would fall by 2%. The market has slowed down from previous years because sellers, seeing an end to the good days of high prices, rushed to put their homes on the market. But this happened at the same time that many buyers backed off because of those same high prices. The glut in supply led to lower price growth and fewer home sales. But as always, local conditions will be the main factor for real estate in your market, Hale says. In some markets, there's still not enough housing available, so buyers are likely to find a competitive market, she says. But in some markets, prices are so high that buyers are choosing to be patient and sit on the sidelines. Thanks for watching the video. Check the link in the bio for more helpful resources, and don't forget to share, like, and follow.